How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance, a channel dedicated to investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, did I call it when I shared with you all that there was going to be a ton of volatility to come in the market? And that is, of course, exactly what happened yesterday morning at the opening bell, with all three composites from the Dow Jones, S&P, and the NASDAQ falling between 1.5 to 2% each. Now, investors across the board are certainly worried about how the Federal Reserve is going to make their next chess move in terms of combating inflation, and exactly how aggressive they will be is going to tell us a lot about what's to come in the future in terms of growth stocks and value plays. And then on top of all of that, we have investors taking a look at earnings from company to company, and we're getting a mixed bag of results. This is creating a lot of uncertainty and a lot of fear, which is, of course, this volatility that we're now experiencing. But for the long-term value investor like you and I, here we are able to double down on stocks on sale. That is exactly what I did yesterday, going in on 4 different positions and actually selling out of one position entirely. I want to get to all of that in today's video. But first, I want to keep you all updated on where exactly my personal account is sitting, which we are actually down today by $1,500.25. Nonetheless, my account is still sitting at a healthy $85,750.73. And again, as that long-term value investor, I have absolutely nothing to worry about. Now, just before we dive in, tap on that thumbs up button and help me grow this channel. And of course, if you haven't done so by this point in time, go ahead, tap on that subscribe button while you're at it. I'd certainly love to have each and every one of you along for this journey with me. Now, YouTube, let's go ahead and dive right in. So I'm certainly excited in today's video because now I get to open up to you all and share with you what exactly I'm doing, what stocks I picked up, what stock I actually sold out of entirely, and most importantly, I'm just hoping you all took advantage of all of the volatility that came about yesterday, because again, as that long-term value investor, these are the days that we should be living for. The days in red are the days we should be capitalizing on. So let's go ahead and just dive right into what exactly I did yesterday at the opening bell. And the very first move I made was actually selling out of a position from the get-go. Now, this position I sold out of not because it's a bad investment, but moreover because it doesn't necessarily align with my dividend investing strategy. This company was a pure growth play that I picked up early on in 2020 to ride the recovery wave. That's exactly what I did. I made, of course, a gain out of this position, sold out of it, and now reinvested the gains into a dividend paying company. So this company I'm talking about is Hexcel Corporation, ticker symbol HXL. Now, Hexcel Corporation was founded back in 1948. It is an industrial materials company that is focused on the manufacturing of structural materials. So we're talking about anything from carbon fibers to adhesives and aircraft honeycombs. Since their founding, they've been a silent leader within their industry. And moreover, they've had a market capitalization up to this point of $4.74 billion. So again, this is to say that Hexcel Corporation is not a bad investment, and actually, in my opinion, still has a bit of recovery left within it for the investor to invest into it and ride that wave out. However, as I said, it doesn't align with my investment strategy, so I went ahead to sell out of this position and pick up an incredibly hot dividend stock to add to my portfolio. It is a brand new position within my dividend portfolio, and this position is StarBucks, ticker symbol SBUX, a company that, of course, every white girl and their mother knows about, so no need to go far into detail about StarBucks and introduce it to you all, but I will share with you that as an investor, it's incredibly important to understand how young StarBucks really is. It was only founded back in 1971, and since its founding has just had remarkable growth. We're talking about a company that has established itself in 80 countries on a global scale and has opened up more than 33,000 locations. Now, I personally believe StarBucks is only really going to continue to grow, and we're really just getting started with what they can really do. Now, in taking a look at their stock share history, I actually almost invested into StarBucks during those 2020 lows. And true story, I did not because I listened to the noise of Wall Street, but we can see here that the stock share price rocketed up to $126 per share. But now, here we are with the opportunity to invest in a rock solid dividend paying company as it fell below $100, which is exactly why I went in on it yesterday. Now, it's important just to take a look into Starbucks' future and recognize that, again, this company is not done growing. They're actually very committed committed to opening up 2,000 plus locations in the near future and delivering through on returning $20 billion back to shareholders within the next 3 years. Now, while they're currently battling unionization and wage inflation, I do believe that for the long-term investor, Starbucks is going to be a rock-solid play. Now, analysts also have that take on Starbucks, coming in at a median stock share price of $125 per share and a high stock share price at $142 per share. Now, that is exactly why I went in to buy 5 shares worth of Starbucks, totaling $490.15. Now, here's where I'll plead with you all to just continue to go out and buy those Mocha Choca Grande lattes from Starbucks, because with each latte you buy, the better dividend paychecks will come my way. Their current dividend yield is only sitting at 1.96%, but as I mentioned, there's just a ton of growth left in Starbucks as a value play within their stock share price as well. So I'm going to be kicking back, sitting pretty, collecting on those dividends, and reaping the benefits of now being an investor in Starbucks. Moving right along to our second pickup of the week, in which I've doubled down on, we have a world-class leader within the healthcare industry. This company is Johnson & Johnson, ticker symbol J&J. Now, Johnson & Johnson, for all of you value or dividend investors out there, is of course a no-brainer investment. It has 135 plus years worth of revolutionizing the entire healthcare industry. And in the most recent news, I'm sure we've all heard by this point that Johnson & Johnson was going to be breaking apart the company, keeping the pharmaceutical segment as well as the medical device segment coupled together underneath the Johnson & Johnson name, but pushing out the consumer goods segment into its own company. Now, I do believe this is going to be an amazing move, and I would have expected that the stock would have exploded from this announcement. However, I do believe because the Johnson & Johnson booster shot as well as the vaccine in and of itself has not been as effective as Pfizer's and Moderna's, the stock is actually pretty stagnant as of recently. But give it some time, because looking into Johnson & Johnson's future, I mean, they have a lot of products up their pipeline, from Darzalex to Stelara, and not to mention all the medical devices that are due to hit the market. And most likely, post-pandemic days, Johnson & Johnson stock is just going to soar. Now, in just looking at J&J's stock share price, we can see it fell from $174 per share down to around $167 per share. Not the biggest discount in the world, about 4% of a discount, but nonetheless, looking at analyst expectations, they're coming in at a median stock share price of $180 per share, a high stock share price of $215 per share. So I went ahead to pick up 3 more shares worth of Johnson & Johnson, totaling $500.13. Now, until it reaches those analyst expectations, you better believe I'm just going to be collecting on Johnson & Johnson's dividend, with the current dividend yield sitting at 2.53%. Next up, I went ahead to further double down on my never sell position. This company is Apple, ticker symbol AAPL, and how could I not, as the entire tech sector has been sliding rather recently. And as I saw Apple stock slide from around $176 per share down to around $170 per share, I went ahead to pick up more shares worth of Apple. Now, I'm going to get to the numbers in just a second here, but it's important to understand what's coming down Apple's pipeline. We have a virtual reality headset, which I really do believe is going to carry a lot of weight for Apple's stock share price to just continue to soar. And then coming into 2025, we have Apple's car that is due to come out, and I really do believe it's going to be an incredibly competitive player taking on Tesla head to head. Now, I went ahead to buy 3 more shares worth of Apple, totaling $512.79, bringing my total share count worth of Apple to 95 total shares, and I'm excited to soon hit my goal of 100 total shares worth of Apple. Looking into analyst expectations, we can see that analysts are expecting Apple's share price to rise to a median price of $180 per share and a high stock share price at $210 per share. Now, until it reaches those new record highs, we do get to collect on Apple's dividend, though small at 0.51%, a dividend nonetheless, and overall just collecting on the value of Apple's stock share price going up over time. And last but certainly not least, because it's all about playing your cards right and just making sure you're setting yourself up for success with a fail-safe strategy, I went ahead to buy just about the entire market by investing into Vanguard's Total Stock Market Index Fund, ticker symbol VTI. Now, this particular fund is one of my favorite funds to invest in, simply because it has over 4,000 companies within it, ranging from Apple, Microsoft, Tesla, Google, Berkshire Hathaway, Home Depot, JP Morgan, United Health. I mean, you name it, it is probably within this fund, delivering through on not only high growth stock opportunities, but dividend plays as well, which is most important. So with that said, I went ahead to pick up 3 more more shares worth of VTI for $694.77, bringing my total share count in my portfolio to 28 total shares worth of Vanguard's total stock market index fund. Now YouTube, that is it. Between selling out of my position with Hexel Corporation entirely, finally buying my way into StarBucks, and then doubling down on Johnson & Johnson, Apple, and VTI, those are the moves I've been making this week. If you like what you heard, you learned something new, drop those comments below. Certainly let me know. Keep in mind, I'm not a financial advisor, so if you're going to make any of these investments yourself, just do your own due diligence. And of course, tap on that thumbs up button and help me grow this channel. Just before we sign off here, make sure you also go ahead and subscribe as well. Now YouTube, until the next video, I will see you all there.